Hello, we're going to work on the BAP company question where we have a couple of intangible assets, and the first requirement is to prepare the intangible assets section of BAP's company. So first, let's start by computing the amortizations for the franchise and the patent that they acquired from Lu and Ring Company respectively. With the patent, the cost was 1.5 million. So they acquired this at 1.5 million. And then the useful life, original useful life was 10 years. So the amortization for 2015 is 1.5 million, which is the cost. Divide that by 10 years. So that gives us an amortization of 150,000. After that amortization, we are left with that 1.35 million. So we are left with 1.35 million balance. Next, we're going to do the amortization for 2016. So amortization for 2016 with some new information. We have new information that now they expect that the patent is not, it's not longer good for the remaining 9 years. Now we revised it down to 5 years. So for the amortization for 2016, we're going to amortize the remaining balance, 1.35 million, divide by the remaining 5 years. So our amortization for 2016 is now 270,000. So we amortize 270 in 2016. So that leaves us with a balance of $1,080,000. Now let's move on to the franchise from Ring Company. For this, we have a cost of 500,000. So we're given that the cost is 500,000, and this patent is useful for 10 years. So we're going to amortize it at a straight line with a straight line approach. So 500,000 divided by 10. So that will give us $50,000. With that, the balance is going to be the 500,000. Subtract the 50,000, we have 450,000. Having completed this computations, now we can move on to addressing the requirements. So let's prepare the intangible asset section. So we will report the patent and the franchise for the balances. So we're reporting it at a net value based on the schedules which are provided along with the financial statements. So from Schedule 1, we have the balance of the patent being 1,080,000, and we have the franchise at 450,000. So the total for our intangible assets section is these two together. So we have 1.53 million. So we have 1.53 million as the balance for our intangible assets section. Next, let's move on to the next requirement that we need to prepare the intangible assets section of the balance sheet. The income tax effects of this company. So first, let's look at the effects for the patent. So from Schedule 1 for this year, we have an amortization for 2016. We have an amortization of $270,000. For the patent, for the franchise from Ring, from Schedule 2, we have $50,000. So for Ring, we have two items. We have the amortization, as well as we do have a payment. So we're paying 5% of revenues to them. Since we had revenues of 2 million, So 2 million, we multiply that by 5% to get the payment that we are giving to Ring. So we have 100,000 that goes to Ring Company. So the total for the Ring Company is 150,000. Another item that we have for this year or for 2016 is the R&D. So we have research and development costs of 320,000. So we have research and development costs that we have provided there on the question of 320,000. So 320,000. So we had all this. Our total expenses in regard to intangibles for this company is 740,000. So we have a total of 740,000 as our total expenses related to our intangibles. So the total is 740,000. And so this concludes the requirements for this question.